Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, and welcome to this post-holiday or in the middle of the holiday, end of the year session of our top stock picks of the week. It is me, Dave Bartosiak, editor of the Zacks Surprise Trader and Zacks Blockchain Innovators portfolio. I'm going to go ahead and give you a double dose of Dave. That's right, 2 picks coming from me. Let's go ahead and kick it off with the first. It is MoneyLion, ticker ML. MoneyLion is one of these sort of FinBiz plays. Zacks ranked number 2 buy in the financial transaction services industry, which ranks in the top 27% of our Zacks industry rank. Coming off of a really nice EPS surprise here, 49.37% last quarter. Love to see that. See these growth estimates, but I want to get a little bit more granular on this in our detailed estimates page. So 24% year over year sales growth for the current year, 21.5% next year. Some pretty great numbers there. You translate that over to the EPS side, they're still losing $5 this year, but that's up 58% over last year. Next year number looks like an 89-cent loss, but that's still 82% better than this year. And these numbers have been moving in the right direction over the course of the last 60 days. You have an analyst coming out, upping the ante for the current year and for next year. What's that done to our Zacks consensus estimate? Well, it's pushed us from $5.73 loss to a $5 loss for the current year. Next year from $1.59 to 89 cents. So this is, I think, where a lot of the positivity is, because you're seeing a stock where next year's earnings estimates, the loss has been cut nearly in half now over the course of the last 60 days. What will happen in the future? I think as long as things are moving in the same direction as they are now, this company could potentially push into profitability over the intermediate term. Last thing I want to look at is with all these is our price consensus and EPS surprise chart. Now, this is something I really want to point out to everybody, right? We have this precipitous drop down from 350 all the way down here. You know, where are these estimates and what the heck is going on here? Well, this came public via one of those SPACs, okay? So that's why you get this real funky looking chart here, because that was before this stock was even in the public realm. So there was some reverse split action that took place and all types of funkiness. So really, when you're looking at this chart, you got to, I know it sounds strange to say you got to disregard all that, but really you got to disregard this chart until, you know, MoneyLion really comes into play. And now you can zoom in and see some meaningful data. There's actually earnings estimates. There's our earnings beat estimates pushing to the upside. And if you notice, these lines are moving from bottom left to top right. That's a good thing. And that's why I have MoneyLion as one of my top stock picks of the week. But remember, you're getting a double dose of Dave. So the second one is going to be Insulet, ticker PODD. They are in the medical products industry, which ranks in the bottom 37% of our Zacks industry rank. But if you take a look at some of these heat maps like I do on a daily basis, you'll see that anything sort of healthcare related in terms of devices or products has been red hot, especially when you're talking about small caps and big caps. So Zacks rank number 1 strong buy right now. Also coming off of a big earnings beat. This is a stock that is in Surprise Trader and is up something like 60% since its addition to the portfolio. So we definitely knocked that one out of the park. And there is a positive earnings ESP heading into next quarter. Something to keep an eye on. Current year sales growth at 25%. Next year, another 19% on top of that, almost 20. So really solid numbers there. Current year EPS, you know, don't look at this 2,600 number and go crazy. So it's coming off of a very low base of just 7 cents EPS last year. Company's looking to make $1.91 this year. If you look at next year's numbers, 30% growth on EPS, swelling to $2.48. And a lot of this has come from recent earnings estimates to the upside coming after that big earnings beat. So over the last 60 days, you have 7 analysts jumping in, jacking up their current year estimates. 10 of them have done so for next year. What's that done to our Zacks consensus estimate? Well, we've gone from $1.60 to $1.91 for the current year, $2.16 all the way up to $2.48 for next year. And again, my price consensus and EPS surprise chart on Zacks. You see a lot of choppiness, but still upside movement 2019, 2020, 2021 as these estimates overpromised and underdelivered. But has something changed now? Heading into 2023, now all of a sudden, these estimates start the year lower and trend higher. Ironically enough, this happened while the stock was reeling in, was coming down from over 300. So why do we have earnings moving to the upside, earnings beats, and a stock that has retreated? Ladies and gentlemen, I call that opportunity. I love to see that divergence between the EPS and the stock's price because that means there's a chance to make some money there. All right, folks, so thank you so much for sticking with this double dose of Dave for our top stock pick of the week. Come back next week. I promise it's not going to be me twice. But this being the last official top stock picks of the year, I want to say thank you so much for checking us out all year. I wish you a healthy and happy and profitable 2024. For me and everybody else here at Zacks, thanks, and we'll see you all